All right, boys. So the main event is actually when Carney starts speaking. Very widely expected not to be any extra stimulus at the announcement, right? What's very important is how he talks about the recent data. Now, importantly, right before this announcement, there was some retail sales that was quite strong. Now, I'm playing on the pound strength. Now, I've been on the pound strength for a while. I'm in the recovery trade type feeling for the UK. Um, Now, the main risk to this trade is not so much Carney, it's more to do with the stock market and the bond market sell off. Um, I do expect Carney to be a little bit dovish, all right? But I don't expect the market to run with that. All right, now that's what my main feeling is going into this, and that's the main way I'm going to be playing it. Um, the main things Carney has to speak about is the pickup in the PMI data, the strength of the retail sales, and the reaction of the market with the rally. Now, that in theory, he's going to talk it down. He's going to say inflation is very low and remaining low, stubbornly low, and we'll do what's necessary to raise inflation. And the outlook is extremely uncertain, and we stand ready to provide further stimulus if needed. You know, that's going to be the main gist of what he says. Um, Depending on his tone and delivery and how he talks about the surprising resilience of the UK economy, I think is how the UK pound's going to play out today, and whether he ignores it or he acknowledges it, and how upbeat he sounds. All right, because in reality, the UK economy is doing quite well post Brexit. Yeah, the apart from the CPI, there's not much that the central bank can be concerned about just yet. Sentiment is quite strong. Data is a little bit weak. Data is not following the sentiment just yet. Apart from the retail sales, data is a little bit weak, and so they may focus on that. But in terms of the sentiment, I mean, they've done their job in terms of keeping um, people optimistic. That's half the battle, right? So at these levels, I'm bullish. I think the pound has some more recovery to do. I'm not buying pound against the US though. I'm not buying cable. I'm buying pound against the euro. All right, so that's selling euro pound. That's I've only got two trades going at the moment: long Aussie Kiwi and short euro pound, and they're more longer term trades. But I'm more concerned about the euro pound than I am about the Aussie Kiwi, even though I'm losing more on the Aussie Kiwi. Um, Now, that being said, because I expect him to be dovish, I'm not totally worried about a rally here in the euro pound. I'm not totally worried about a sell off in the pound. I'm worried about a sustained sell off, and also stock market reaction to uh, further bond yield rises. Now that's something different. Um, but today there is some optimism in the market, a little bit of a rebound in the stock market, and some strength coming through on the dollar yen, which is an important part of the pound yen trade, which you always have to be watching if you're trading cable at all. Okay, so just 1 second, let me bring up the pound yen so we can have a little look at that. Pound yen is an important bellwether for how the pound's going. It does well when stocks are doing well. It's a little bit mixed at the moment, but not as poor as in recent days. All right, now, so we're watching this particular pair. Now, I'm not saying that the bottom's um, in the pound yen, but I am looking for the rebound here. If this begins to rally and the pound can rally with dollar yen, you've got yourself a nice little outperformance of the pound, and the euro pound will fall. But it really is down to the tone of Carney. So it's funny that we have to talk about the tone of a central banker, but we pretty much know what he's going to say. So it's more about how he says it, yeah? So going forward, that's going to be in 45 minutes? Usually it's 45 minutes. Let me just double check that. Not straight away. Oi, Carney. Connie speaking today. I could have been misinformed. One sec, boys. This could be one and done. This could be it. This could be a non. Well, this is embarrassing if this is true. I believe that I was preparing for the Carney speech, right? Because that's what the pound moved on last time. He was dovish with the inflation hearings. If that is not the case, then we're not going to have any movement. Well, it doesn't hurt the trade, but it's not what I was preparing for. Do you have a link there, Big River? Because my sources aren't giving me the link that they usually would. Twitter, are you failing me? I don't know if there's like a press conference today. Read that off screen. Oh, we might just go to normal update if that's the case. Oh God, no live meeting. We set this up as a live meeting. I just took it as given there was a live meeting, which is 45 minutes after usually. Okay, well, Jesus. Sure, I work in Forex. If there's no live meeting, then this pound reaction is going to be very muted. Yeah, the market's not getting much there. Slight upgrades to the forecasts. That's the only main thing that the takeaway is. Yeah, well, I mean, we do look forward to the US news. I think on the balance, though, retail sales being strong from the UK. I mean, not as strong as last month, but stronger than expected, is a positive sign. Just in general, backdrop of stocks being strong means that well, recovering anyway. Keep an eye on them. The sneaky little characters at the moment. You'd want to be remaining along the pound against something. Just what that is. I mean, look, if stocks go down, then the pound yen, pound Aussie trade continues. If stocks rally, then the pound against the euro, pound against the US looks a bit better, pound against the yen. So there is two ways to play it, but oh golly gosh, I'm embarrassed. I was looking forward for Carney's speech. I mean, he only spoke a little while ago, right? At the inflation hearings. And he was very downbeat then. He's like, everyone stop getting carried away with the market rally. But much ado about nothing. Hilarious. Alright, well, let's go into the full market update then, guys. We did have the usual stuff out of the S&B a little bit earlier. So Swiss National Bank came out, pretty much held everything at the same. Warned about inflation, warned about intervening. They do this every time they meet. So there's nothing new there. The dollar Swiss, though, has been threatening to try and break out to the top side. If that does happen, then potentially the pound Swiss trade comes back in, but Euro Swiss, which is the main way that the market plays the Swiss cross, it's not even the Swiss cross, it's the main cross in that pair. I mean, grinding higher even in the face of the negativity there. But dollar Swiss, in terms of the ability for it to break out, really requires the euro to do something. So this daily chart is not a joke. This is seriously the range it's been in for the last 6 months, and it mirrors what the euro's done for the last 6 months. Basically they move 1 for 1. A little bit of outperformance on the euro though in recent weeks is grinding higher. So we got out of our euro Swiss trade mainly because stock markets were weak, and we thought that might pressure this lower. Back into that 108, 109 range. So far that hasn't happened. S&B is a non-event, so don't worry about that. In terms of the US retail sales, I mean, look, it can't hurt Fed expectations, which are quite low anyway. But generally, it might give an upbeat tone for the market, which will cling to any sort of positive news at these levels in terms of the market positioning short term. Forecast to be quite strong. If it comes in weak, I mean, look, you can obviously get back to the downside in terms of market sentiment, but the sentiment's already pretty bad, right? So it's like adds a little bit more to it, not too much. In terms of how often they have these. Oh, okay. Sorry, yeah. They only have a meeting. They only have a live press conference if they do something. That's the gist with the BOE. I sort of forgot that. Then they come out and explain why they did it. I mean, look, the short-term effect of the retail sales will be there. It's not like you want to chase the market on the US retail sales, though, right? More to do with checking the bond markets, see if they continue to be selling off, and then whether you're going to get that follow through. I mean, certain pairs like the Aussie dollar. So I trade a lot of the Aussie dollar just because most of my clients trade the Aussie dollar. You got to watch it, right? It's attempting to base at that 74.50. It's only so long that you can watch the market trundle along at a support before the sellers get a little bit anxious. Combining with the stock market having a little bit of a relief rally, then the Aussie had a little bounce. This is okay. The Aussie unemployment numbers were mixed, so the unemployment rate dropped, but the headline was negative. Looking inside that headline, though, you saw the full-time employment bounce back from last month, and it was mostly part-time employment which caused that negativity. So the market couldn't run with that. In terms of what's the situation here and the price action here, after finding support, even after a break, it is likely we test 75. Now, if there's a larger move against the US dollar tonight, then a break back above 75 is likely, and a stop little run up to around of 75.20, 75.30, 75.40 is normal. It shouldn't get above that previous high though. All right, that's on Monday. If that happens, then perhaps there's a piece of good news out there, like the ECB coming out announcing plans to extend the QE in March or from March 2017 at the next meeting. Something along those lines is a very big event that will impact the sentiment in the markets. Now I don't think we're going to get that until there's more selling in the stocks. It's unnecessary to come out with that sort of talk until there's a bit of blood on the floor. And there's not so much blood on the floor just yet. So if that did happen though, and it's one of the reasons I'm short euro pound, in theory it should hurt the euro, short term anyway, but help the sentiment, and that would help the pound rally. Alright, so euro pound's got a little bit of logic behind it. In general though, stock market weakness before they do announce that would help the euro pound rally, so it's a bit of a game in that regards. Alright, so a lot of clients asking about US dollar. Now, US dollar yen, yeah, look, that failure yesterday was pretty noticeable. And Asian session today, we got some pretty aggressive selling. I mean, look, I think the fate of this particular pair is going to be set next Monday, Tuesday by the BOJ. No one really expects them to come out with much anymore. No one really expects them to do that foreign bond buying. It would be a surprise. If they don't, we're going to have some repercussions in the market. Yeah, it's a situation where the BOJ disappoints and the Fed doesn't raise rates and is dovish, which is pretty likely, is a really bad combo for the dollar yen. So that's a combo where you might see dollar yen break 100. But we're going to have to play it by ear there. I think the market's priced in too much support from the BOJ this month. So we'll see. And you might be asking, how's it priced in support? It hasn't rallied. It's not fallen. And it would have usually fallen pretty sharply in the recent days, especially on Friday last week. And it managed to rebound just on the bond yield side of things. So it is sensitive to US yields, right? It does move to that, but it's not the big game. The big game is what's going on with the BOJ. So you're placing a little bit of a bet there on that regard. Alright, so there's not too much actually happening until we get to that US data. I don't know if I can actually do that US data for you guys because our friend Ryan does do that event. Let me check the timing of his live stream. Yeah, so he's going to be going over that into the announcement. We might have a look at a couple of these trades. See what the punters are thinking. Now, yesterday this hurt the stream, so hopefully it doesn't. Let me know if that's... What is this? Just for kicks. Alright. Yeah, okay, maybe. That's probably working out right now, but I don't trade just for kicks. Alright, the Aussie Kiwi. New Zealand GDP was a little bit weaker. And also, even after that weakness of the headline Aussie job numbers, we did see some nice constructive move here in the Aussie. Hard to say that the selling is over though. And in the last couple of... Yeah, I mean, look, you wouldn't want to bank on this one rallying just yet. So you got a lot of traders like Jenny just selling every rally. She doesn't care. She'll take out money. Wow, there's a lot going on this chart. Okay. Cat Swiss. Yeah, what? What? Where's the chart? Yeah, no. No, that's not going to like either. You let these crazy cats play. Alright, Aussie long. I didn't get it filled, so it's a bit of a mute trade. But I don't mind Aussie long. Alright, so Rapid wants to sell an Aussie rally, relief rally. Maybe you'll get that relief rally into the Fed next week. And if the Fed's dovish enough, you may get that. I understand this trade. This is sort of, we want to fade into any sort of relief rally that the Fed provides, because after the relief rally, if the bond yields start to rally again, there's not going to be much to stop it, right? Alright, he's also going to short the Kiwi. Look, the Kiwi is not going to go down if the Aussie's going to go up like you expect, right? So this must be a different sort of time. I want the Kiwi to fall. I want the Kiwi to break that 72 support. Break the 72 support. We're going to get some nice little uptick there in the Aussie Kiwi. I mean, I'm looking for the reverse on the Aussie Kiwi. I'm not looking for a 100-point rally. I'm looking for the big one. But I understand a lot of clients, a lot of traders are looking just for that 100 pips, or just to get out of their trades where they entered at 104, 104.50, 105. And you might get that with a Kiwi collapse. You may not get that though, other than that. What are we saying? There's rigging going on in the rigging going on by the in the charts. Look, there might be. It's $500, right? Might as well try. A little bit of attention on the pound yen. Yeah, look. Not the most trustworthy of allies, the pound yen. Most of this is coming from the dollar yen or the pound. A little bit from the pound. And must be a little bit from the dollar yen. Stocks are taking a little bit of a turn here. You might see that a bit more follow through. I wouldn't get too excited on the downside though. On the pound yen. Not pre the US data, right? You want to play US data, US Open to see how they want to play today. Looks pretty negative though, doesn't it? Pound Aussie. Yeah, pound Aussie. It's in an uptrend. It's makes sense. It combines the UK recovery trade with the Aussie getting smashed in the stock market falling sort of scenario. You may want to just pick your level well, right? You may want to buy back towards that 175-ish level. Let the Aussie have its bounce. When the Aussies run out of steam, then come in and buy the pound Aussie. Or if you get some sort of bullish momentum in the pound again, then you can just hop in any level. Similar setup on the pound Kiwi to this trade. So the pound Kiwi is a more aggressive friend of the pound Aussie, and the pound Kiwi's got more room to move on the top side if the Aussie Kiwi can start to rally, of course, right? But now this is a trade we talked about early in the month. Now the reason we were getting involved in this trade early in the month was not so much about the bond market sell-off, it was about the RBNZ timeline. So the RBNZ's coming out just after the Fed next Wednesday night, so Thursday morning. And Wheeler has an opportunity to correct his mistakes and start to jawbone properly. Talk about upcoming rate cuts. They're unlikely to cut this time. But talking about upcoming rate cuts would allow this particular pair to rally sharply. Aussie Kiwi to rally. And it's going to be fairly anticipated. The Fed's a big event, of course, but just after it, that RBNZ, they're going to set the tone for the speed at which they're going to cut rates going forward. Now, they've priced in 1 to 2 more rate cuts. RBA is pretty much sitting on the fence. RBNZ's at 2%, RBA is at 1.5%. Any closing of that gap is really important for the Aussie Kiwi rally. So keep that in the back of your minds. That's not too far away. It's only 4 or 5 trading days. And if the pound can muster a little bit of oomph, then the pound Kiwi trade, it makes a lot of sense to me. I like it. I like it more than the pound Aussie. But I don't trade it, so I'm trading the Euro pound short. Where are you going, Euro pound? Okay. Euro pound gets above 85.50, we're in trouble. Yeah, a little bit of trouble if it gets up there. Oi. Then it can be a stream about blowing up an account rather than a stream about the market, right? It can be like you guys just chanting fall, Aussie Kiwi fall. I've got heaps of my FX books. I don't know if any of them public at the moment. I can open one up. I'm not trading too badly lately. We made a lot of money in June. We got a lot of the uptrend in the dollar yen. Giving money back the last few weeks. Well, holding big drawdowns anyway. So that's the main issue there. But yeah, no, we're not trading too badly. It's just some of the trade ideas are a bit fundamentally based and wrong rather than technically. I might go back to some safer trend-based trading going forward after I sort of see these trades out. But yeah, look, we're going to be hopping in and out of other trades. We have many trades going a lot of the time. At the moment, we've only got 2 different trades going, but there's many opportunities coming forward in the market. Mainly to do with selling the Kiwi and what the Fed does. How dovish is the Fed? I mean, they can't be super dovish if they're going to be expecting us to believe them raising rates in December. But they have to be a little bit dovish to help the stock market bounce back and to stop this bond market sell-off, which is, if they don't control it, could become a huge thing. So they're firefighter mode for sure next week. All right, let's have a little bit of look at research. I'm gonna chill on. I'm gonna chill on the call-in of the charts right now, and we're just going to look at a little bit of bank research, read their view on the outlook of the U.S. retail sales, also some of the expectations here for this bond market sell-off. See what they're feeling is. I've talked to some big bond traders and they don't think this is the big one. So I don't know. I'm mixed. I'm I'm happy either way, right? Volatility's good. Yeah, we're going to be talking about US retail sales. Ryan, the next streamer, he's going to be doing it live. Ryan's a bit of a a technical trader though. Don't think he's going to take too kindly to the news. I feel like he thinks it's noise. We should have a debate one day: fundamental traders versus the technical traders. They'll be like, "So this news came in weak and the market's still rallied. What do you say about that, huh?" And we'll be like, "Oh, market was short. It's a short squeeze. Sell the rim by the fact." They'll be like, "Ah, well, look about this." It's true. I mean, look, fundamental traders get into trouble when they're wrong, because where do they take their stop? The ego is the stop. With technical traders, you've got a predefined stop based upon your system that you're using, and generally you trade with the trend and you don't care too much about the news. So I understand the benefits of technical trading, but I do like to know why the market's moving. And once you know why the market's moving, it's hard not to have opinion on that. So you end up having at least a very hybrid view of the market, technical plus fundamental. Technical's there to get you out of trouble when you're wrong. Fundamentals there to get you trade idea to begin with. Obviously, the good fundamental traders are the best traders in the world. It's just very hard to be right all the time. So it's not everyone's born to be Soros, right? Not everyone can see the pathway that a political or economic problem is going to have a solution to, and that's what those gurus at hedge funds see. They see how the central bank's going to react, how the policymakers are going to react, whether it be in stocks or in bonds or in currencies. They pick a inflection point. They pick a move well before it begins. Price action traders are a little bit more technical traders. Price action traders is probably the best form of technical trading. It's where you use experience in reading the candles to sort of add to your edge. Now that edge might be momentum trading or breakout trading or trend trading. Whatever it is, you use a little bit of this experience, which is what price action trading in the end comes down to add to your winning ideas, and try not to get too much into the fundamentals. Yada yada yada, not much here. Alright, Rubber Bank, you did not impress me much. Alright, Nomura is changing their view on the BOJ action. Let's see what they've said. Alright, so yeah, this steeping in the yield curve. We might talk more about this on Monday. The steeping of the yield curves, this new trendy thing that's everyone's talking about in the Asian session, and how the BOJ is going to try and change market expectations here. We'll talk more about what it is and whether it's as effective as, say, buying foreign bonds. I think they're going to this new idea because buying foreign bonds is going to get them in trouble politically and also G7 wise, all right? So politically at home and G7 wise away from home. But yeah, the bond steepening is just buying different years bonds at different speeds to try and affect market expectations. It's something new. So I suppose they've tried everything else and might as well try this. Yeah. Baker reading the candles does sound like a psychic. That's true, mate. Just a little market check before we have a look at Societe Generale, SocGen. Oh God, pound, what are you doing? Right, so obviously 3140 comes in here as key, but that's really only going to be in play if there's a weakness in the US data. I don't know. I think I'll take a stop if it goes back below 131. I'll just hedge or get out. You know, at some point you're obviously wrong, right? I mean, that would require UK data to start coming weaker, and then the whole trade idea is gone. Oh, SocGen's long Aussie Kiwi. Interesting. Now remember that we did show the Deutsche Bank article saying that they expect parity. Alright, one more report, boys. Then I'll let you be tonight. Sorry about the misunderstanding for the BOE. It's completely skipped my mind that Carney wouldn't speak unless they did something. We had so much fun last time he spoke, right? I mean, no one expected them to actually do something, so I was only really thinking more along his speech. How dovish he could be. Alright. So the overview is pretty good here. Aussie dollar is the G10's worst on ground over the past week, showing sensitivity to global bond sell-off, which dulls the Aussie yields appeal. So we talked about that the last couple of days. When bond yields rally, the Aussie yield up, the relative Aussie yield disappears. Also, when stocks fall, Aussie falls. So it's a double whammy on the Aussie. They do expect a weaker US dollar out of the FOMC, so do a lot of people. Now, there's a problem when a lot of people expect the Fed to do something, and if they're a little bit more hawkish than forecast because they want the market to price in, say, the December rate hike, we're in for a little bit of a shock here. In for a little bit of a shock. Alright, so this is the taper tantrum. Okay, if you don't remember that happened in 2013. That led to a really big sell-off in stock markets. And that's around 130 basis point rally in the US 10 years. I don't know exact number that the US 10 years have rallied so far, but definitely nothing like that. I'll find out for you though. Yeah, my mate Dominic Cook, he's watching. He's a new dealer we got in the office. I talked to him at length about the BOE today, and I failed to let him know that Carney wasn't speaking. So this is just a small rally in the 10 years. Yeah, we're talking 10 basis points so far. Nothing crazy. In terms of getting back to the year highs, we've still got some room to move here. But definitely we're starting to trend higher. And that's the Fed's going to have to, if they want a December rate hike, we're going to see that move higher itself. So that was a okay, let's chart. Alright, boys. Back to the last of the update here. Oh god, we just had to scroll down and they did it themselves, right? Jesus. So yeah, the US dollar index, it does have a very strong correlation with what's going on with those 10 years and 2 years. 2 years obviously moves much more on the impact there. It moves much more on the Fed rather than this bond market sell-off. We've been talking about the euro dollar busting out at some point, right? After 2 years of keeping pretty much similar ranges, the next move is going to be a big one. Pretty decent arguments on both sides of the camp, though. The parity on the euro USD or the 120, 125. I'm more inclined to think 125. So positioning of the pound remains extreme. That's true. Still, the latest market news from the bond market, bond surge is definitely US dollar positive, so that's not helping. I'm much more interested in their view on Kiwi. So market's expecting they're going to signal this rate cut in November. If they don't signal that, then yeah, it's true. We're going to get another rally. That's going to push that Aussie Kiwi down to probably that parity test. The backdrop of this happening at the moment is the milk prices, which is important for New Zealand. They've been on surging, so they're up like 20% now in the last 6 weeks. Futures currently expecting another 7% gain. So that's their biggest export, 25% gain in 2 months. All right, so they doubt that the bond market-driven decline in risk appetite will morph into a serious decline. The underlying causes of low global rates is a soft growth and no inflation, and they're likely to remain in place and unlikely to change anytime soon. All right, that's pretty good argument. That's a pretty good argument as to this bond market being the bond market sell-off being a false start. You're probably going to need inflation to start the big bond market route. Okay, that's not now. It might be caused by a geopolitical event which causes oil to spike, and then if oil spikes, you get the inflation, artificial or not. Then that might lead to the bond market the yields start to rally and the bonds sell off. But right now, with inflation so low and growth so low, perhaps it is hard to see a really big sell off in bonds. Yeah, so finishing up my view on the pound, I'll just recap basically what I was looking to go long. Looks like I'm long and wrong on that one. I favour selling Aussie rallies. I expect there to be a chance here of the Aussie breaking above 75 again, if risk appetite permits. So I do want to fade a rally towards 72, 75.20, 75.30. But other than that, I don't have too much conviction in the current market. More, I'm going to react to what's going on in the stock markets, whether this is the real deal or not. But as Westpac just said, the argument there is quite strong that this is not going to be the real deal. And with the Fed coming up next week and then being dovish if there's any market volatility, you may not see that follow through in this sell-off. So therefore the Aussie might have chance to rebound early next week, or later next week, sorry. Alright guys, good luck with your trading. I'll be back tomorrow at 9 GMT, the normal time. We'll see how some of these trades develop. And if you do have any questions, want me to look at a particular pair, I will look at it for you. Keep a close eye on the stock markets tonight. Once again, they're in charge of everything right now in terms of most of your trades. And the US data coming up in 35 minutes, which will be covered by Ryan. Alright guys, good luck with your trades. Trade safe.